Welcome back. Today we're going to focus on two emerging auto tech companies. The first is going to be INDI Semiconductor and the second, Allegro Microsystems. We'll go ahead and first start with INDI.
Okay, yeah, INDI Semiconductor, ticker symbol INDI. We've shared some articles that I've written in the last year, but let's talk about it a bit more in depth because this is one that we started to nibble on last year and recently trimmed, took all our profit off of the table. So it's back down to a very small position.
Just a little background, it's a fabless semiconductor company that designs and markets high-performance, analog, mixed-signal integrated circuits for the automotive, industrial, and consumer markets. So used in all kinds of applications, the infotainment systems, the advanced driver assist systems, or ADAS, industrial automation, and consumer electronics.
Before continuing, let me remind you to hit the like button and subscribe to the channel if this video is helpful as you do your own investment research and increase your knowledge of business and technology. We really appreciate the support as subscribing to the channel helps us continue putting out content like this. Yeah, this is basically an automotive technology pure play. You dug up a slide from an INDI presentation showing basically the integrated circuit market for automotive. The total addressable market through 2027 expected to grow an average 11% per year. And then of that, the served addressable market, that's basically of the total addressable market for automotive tech, what INDI is prepared to actually provide chips and services for, expected to grow 13% a year through 2027. So this is, I think, on a lot of investors' radar because it's an EV stock pure play. And of course, I think it's on a lot of investors' radar because it's been putting up triple digit percentage growth since its IPO. And the stock price has basically doubled in recent months. So.
And I did read that they've made a couple of acquisitions that seem like they're trying to even get a bigger slice of the pie when it comes to this market. Semiconductor, as well as a couple of segments of companies' radar divisions. We have on radar division as well as analog devices radar division, and then a company called Silicon Radar.
Yeah, so those three specific segments, basically INDI purchased the intellectual property from analog devices and another startup to get radar technology for use in automotives. And then the latest one that you mentioned, $180 million acquisition of Semiconductor, and that's specifically image and video processing chip technology. That's a Japanese company. Semi is a Japanese company that serves the Japanese auto market. So INDI really basically doubling down here multiple times the last couple of years on sensors for the automotive industry. So it looks like at this point, they have IP that addresses in-cabin infotainment, also vehicle electrification, but these acquisitions that they're making looks like it's kind of steering the company, if you will, towards advanced driver assist systems. So kind of putting the company on the road towards maybe someday fully autonomous vehicle technology. Lots of chips needed for those. So it's basically a sensor company. Let's call it that.
Okay, and with all these acquisitions, I know that INDI at one point had a very clean balance sheet. They had no debt. It was well funded. But now with the purchase of these companies, how does that affect its balance sheet?
This is what really starts making me a little bit nervous. Maybe I shouldn't say nervous because this is a very, very tiny position for us again, especially after we took the profit off the table. So maybe I shouldn't say nervous, but if this was a large, significant position of my portfolio, I'd be nervous right now. So most of these acquisitions were made by issuing new INDI stock. The latest one, Semiconductor, is a $180 million acquisition. 90 million of it will be paid for in new stock. The other 90 million paid for in cash, which meant INDI went out and raised debt to help finance it. So as of the last quarter, Q4 2022, INDI said it had $322 million in cash and short-term investments and $160 million in debt. The $160 million in debt it already took out to help fund the Geo purchase. So of the $322 million in cash, $90 million of that is going to exit, and then another $90 million in new stock issued. Maybe this would be a good point to mention the video that we've done on the effect of stock-based compensation. This isn't stock-based comp per se, but it is new stock issued to other parties that kind of dilutes ownership for existing shareholders. So basically, your revenue growth on a per share basis is less than what is going to be stated each quarter because of all the new stock INDI is issuing. So this is what makes me a bit nervous about the company right now. High growth business, but I think it really deserves a footnote because of the they're shelling out lots of equity to keep their momentum.
It's a relatively young company. It's in its really early stages. And at this point, its products are not widely used, from what I understand. In fact, when I was looking at the financials and the forms, there's very little in the way of revenue breakdown. Why do you think that is?
Well, INDI has big competitors. So I think whenever you start talking about analog chips and sensors, we should automatically think Texas Instruments, which is a big supplier to the auto industry. And so INDI, at this particular stage, an emerging growth business, they probably want to be a bit cagey, maybe a little bit secretive with how much public information they give on their sales and specific products that are driving their growth. But it would definitely seem, as you pointed out, that radar and maybe image and camera technology is currently what's fueling a lot of the company's growth at this particular point.
It's something we've talked about on a few videos that you've mentioned, Nick, is currently the auto market's kind of up in the air. It's been on a decline. And so INDI is obviously going to be susceptible to these cyclical trends in the auto market as well.
Yeah, just one note on that. We do expect the number of vehicles to be sold in 2023 to be maybe flat or lower than they were in 2022. Now, a lot of these companies like INDI can still grow because the content per vehicle made is on the rise. Each new vehicle being made every year has more chips, more sensors, more electronic equipment in it. So we do think this company will continue to grow. But the reason why we took our profit off the table, the stock is expensive. It trades for, as of this recording, 11 times trailing 12-month sales, maybe more like 6 to 7 one-year forward sales. Of course, not including the effects of Geo Semiconductor, but still, I think a premium price for a company that does not generate a profit yet and a company that is issuing lots of stock and diluting shareholders. So I think this is one investors would be wise to be prudent with. Don't chase. It looks like we're getting a pullback in INDI Semi, so let's maybe stay tuned and see what happens here. Maybe a good buying opportunity will present itself, but I think this is maybe just to reemphasize the dynamic going on here. Whether you're a long-term investor or not, don't chase hot stocks just because they're growing. There's a lot of other stuff to consider under the hood.
Okay, so what is our price target for this stock?
Oh, I knew you'd ask me that question. And if you didn't, someone was probably going to ask the question in the comments. So this one is really tough to predict because the company is probably at least a few years off from generating positive GAAP net income. On an adjusted basis, they may hit profitability as soon as later this year, later in 2023. But still, given that at this particular point, it's difficult to put a solid price target on it. This thing is going to be all over the board, but I would not be at all surprised to see it dip back to $8 a share. Not that it will happen. Again, this one's hard to predict, but it's a tiny business, and share price is just going to be all over the board. So I don't think we're interested in adding to our position unless it like dropped down to $8.